I am down more than 2 grand on my last Bitcoin trade, but big, serious players in the market are still buying. So what went wrong and where do I see things going from here? Let's jump straight into it. So Bitcoin today, trading at a price of $113,671. You can see that I am down $60 unrealized profit and loss on my 0.9 BTC position. We were long from just about this price, okay? This is a 20x leverage long position. And when I say I'm down nearly 2K on this, that is because we peaked out at about 116,000 plus change, $116,400 or so. And that would have put this trade up at about $2,000 in unrealized gains. So we have an unrealized loss right now of $50, and we are down about 2 grand from where this trade was. Now, of course, I am not looking to sell out of this trade just yet. If you've been following along, you will know that we entered into this trade on limit orders that we placed before this massive sell-off. This was, of course, the historic $19 billion liquidation event, $19 billion long liquidation event that sent markets down, Bitcoin markets down as low as $102,000 on some venues here on Coinbase Spot. It's more like $106,867. But nonetheless, we saw this happening. We saw the potential for this to happen because of the buildup of leverage long in the market, and the spark that lit that fire. The fuel was the leverage. The spark was, of course, Trump threatening further tariff increases on China. So the reason why I'm still in this position, I'm still comfortable, is because although we are leverage trading here, we're 20x leverage in this position, we are thinking more for the long term, okay? I've been down as low as about 5 grand in unrealized losses on this trade. And so I'm not looking to sell out. I'm not looking to snatch profits at a mere 2 grand plus on the trade. I am looking at a recovery. I'm targeting a recovery of this down move in this trade. Why do I think that's likely? Well, there are a multitude of reasons, but one of the biggest is essentially the opposite of what caused this big crash, and that is leverage in the market. So if you caught yesterday's video, you will know that we saw the possibility of a sell-off after capping these highs here at 116K. And the reason why we saw that was because, once again, leverage in the market. We know that the lemmings, that I like to call them, the retail high-risk traders who love jumping in, leverage long as soon as they see green candles, had followed the old same pattern. This is exactly why we can't have nice things, but if you're aware of this pattern and how it plays out, then you can take advantage of it, and that is what we've been doing to a net gain over the last few weeks at least. So taking a look at how the leverage is stacked right now, you can see that, sure enough, since we've been selling off, there are now more shorts in the market, and that means there is more short liquidation risk. This is a nice imbalance, okay? So you're looking on the daily time frame, something like $600 million worth of short liquidation risk at prices to the upside versus about $400 million worth of long liquidation risk at prices to the downside. So there's very clearly a imbalance of shorts in the market. Now we know when short traders get liquidated, they are essentially being forced to buy Bitcoin onto the market. And when they are forced to buy, that means they're buying rapidly because they're not doing it rationally. They're not making the decision to buy. They're just being forced to buy onto the market. And that sudden increase in demand causes prices to go up. Let me just explain what I mean by showing you the liquidation map here. And here you go, on the daily time frame, $600 million worth of short liquidation risk to the upside versus about $400 million worth of long liquidation risk to the downside. And where this gets really interesting, this is what you really need to pay attention to, is the longer time frames, okay? You can see here on the 30-day time frame here, 30-day time horizon, once again, over $5 billion worth of short liquidation risk to the upside. Now that is coming in at prices of about 128K, but look at all of this at prices down from that, right? Peaking out at about $119,673, and that's worth about $2.8 billion worth of short liquidation risk. And what we have seen now with this up move, okay, we've confirmed the uptrend because we broke this high here. So a technical uptrend is when we've got a low here, a high here, a higher low, and then a higher high here. So we are in an uptrend now, and we're starting to see a slow but steady reversal of the same forces that brought us down here. Now, that is why I am happy in this position, okay? It is a high leverage position for me. but playing out a big opportunity over a long time horizon. So there we go. I'm still in. There are others buying. If we take a look at the ETF flows, this is a tool that institutional investors use to get exposure to the Bitcoin markets by basically having an ETF run by a number of different funds, for example, BlackRock, Fidelity, etc., buy the Bitcoin on their behalf. So institutions that aren't allowed or able or don't desire to hold Bitcoin on their balance sheet can get exposure to the Bitcoin markets via an ETF who buys it on their behalf. But someone else very important is buying today, and that is, of course, none other than Mr. Michael Saylor of Strategy, former MicroStrategy. It is Orange Dot Day. Michael Saylor's Strategy buys another 390 Bitcoin for $43 million, bringing their total holdings to 640,808 BTC. There you go. Strategy has purchased another 390 Bitcoin for approximately $43 million at an average price of $111,117. $111,000, okay? Once again, these big sell-offs are very rare, and they are massive, massive, massive buying opportunities. Once you realize that it doesn't feel good to buy into fear, but it is the best possible thing that you can be doing if you're looking to get returns outside of the market as a whole, and it's called outsized returns, you will start to make money in these markets. Now, of course, that is not financial advice, purely my opinion, but look at what the big investors are doing. Look at what the smart money is doing, and try and avoid acting like these retail lemmings who jump in after they see the trend happening and end up getting wrecked. You can see over the last 12 hours, $135 million worth of longs got liquidated. And let me just be very clear about this. Yesterday, I told you about how $200 million worth of shorts got liquidated. So it's the same thing. It's flip-flopping from side to side, from side to side. In my opinion, the tide has turned, and now we're looking at more of the shorts getting liquidated. There's certainly a lot more of them to liquidate as prices start coming up. But there you go. That is the seesaw. Okay? If you're getting liquidated, it means that you are not managing your risk correctly. And if you have become liquidated, i.e. forced to close a position, then you're not in the game anymore. You can't take advantage of big sell-offs like this. They no longer represent opportunities to you. They represent threats. So where we are right now, I wouldn't be surprised if we saw a bit more downside, because there is still some long liquidation risk in the market. You can see down to 112,600. It's about $200 million worth of long liquidations that could go through. So if that resulted in a similar move than we saw over the last few hours or so, like another 2.5%. So we measure that out on the chart here. This is absolutely not a exact science, okay? Mostly because traders can choose to exit those positions. They can emotionally capitulate before they become liquidated, or they might have placed stop losses, which is still going to result in forced selling if those stop losses go off, but it's not going to result in a liquidation. But nonetheless, if we see another move down, similar to yesterday, bring us down to a price of about $110,000. Now, the other chart that I've marked on here, onto my Bitcoin chart, is a fixed range volume profile. So you can see if we draw that from the lows of this move down to current pricing, we have got a point of control. That is a high volume node. That is the highest volume node down at a price of $108,000. Usually, what this means, okay, is that the most amount of volume has been exchanged at these prices. What that means in practical terms is that that would tend to act as a magnet for price. Okay, price tends to fill in areas of low volume on the chart, right? That's like where we are right now, and potentially this dip here, and it tends to magnetize towards areas of higher volume because the market has accepted prices at those levels historically, at least for the time period that we're looking at. So all the way down to here, I would still consider that a buyable dip. But ultimately, the tide has turned, and we are looking to liquidate these shorts. So the type of move that I would be totally unsurprised by would be a move down like this, liquidation of some more of those long positions, a little bit more pain, everyone starts jumping in shorts, we find liquidity, bounce from that liquidity, and on that bounce, you actually start liquidating the short positions that got in on seeing these red candles that we're seeing right now, then price can extend to the upside, potentially overextend to the upside. So, all of that being said, we know that institutions are buying. We know that good old Michael Saylor is buying in a big way. Look at where he was buying, by the way, $111,000, okay? Prices that would have been absolutely stunning to be buying just a few months ago, but right now that is considered buying the dip. That's his average price, by the way. Gold is down. We know that when gold is down, okay, look, the trend on gold confirmed into a downtrend. Gold has topped out, at least for what we can see right now. We've made new lows in gold pricing, and historically, you can see here, I've charted gold at the bottom versus Bitcoin at the top. When gold enters downtrends, like here, back at the end of October 2024, Bitcoin tends to enter big uptrends, okay? Again, here on Tuesday, the 15th of April, 2025, gold starts trending down, it tops out, and potentially capital rotates into Bitcoin, and Bitcoin starts trending up. So I'm very comfortable in this position right now. I wouldn't be surprised if we saw another dip, but I certainly wouldn't be shaken out by that. There you go. That is just what I'm looking at today. Of course, nothing I say should be considered financial advice. This is purely my opinion, and I'm sharing it just for entertainment purposes. But thank you so much for watching. Plenty more to come. Catch you in the next one. Bye.